What's up, financial Zen masters? Happy Saturday. You can make money in the markets by either speculating or investing, but only one of them will consistently give you long-term returns over the lifetime of your portfolio. Which one? I don't know. Stay tuned to find out. Welcome to the Financial Zen channel, where the big question is, how can you, a super successful working professional with kids at home and a mortgage to pay, how can you quit your 9 to 5 so you can go pursue your passions while still providing for your family? That's the question. I got your answers. Hey, it's Rick. I'm your guide and host of the Financial Zen channel. So right now I'm very excited because I am currently working on an investment guide, a course, a 7-step course for people that aren't full-fledged Financial Zen members. So I'm very excited about it because I've always wanted to help people that didn't quite make sense to work with us, but I wanted to help them, but it's always been all or nothing. So I'm excited about this course. That's not the point. The point is that through putting together this investment course, I've gone back through a lot of the books and kind of researched and gone back through many of the ways that I got to our current investment philosophy and how we got here and why it works, and just kind of when you teach this stuff to somebody, that's when you kind of sink it in even more so for yourself. So I'm going back through some of my old books and the ones that hit me the hardest, and one of them that hit me the hardest that I think is one of the most important concepts in making money investing is by this dude named Charles Ellis, pretty famous if you're in the industry. Anyways, he wrote this book, Winning the Loser's Game, which is this whole book about why index investing makes sense and passive investing makes sense and actively investing in things does not make sense. But one of the core concepts that just, man, I remember when I read it. I remember sitting on my couch when I read it. It was like 5:30 in the morning, as I tend to do. It must have been maybe 6 or 7 years ago. And it just hit me like a freaking ton of bricks. And that is the difference between speculating and investing. And what he says, he says it in relation to stocks, but it's also in relation to anything that doesn't hold any type of, he used it it applies to stocks, but the easiest way to explain it is when dealing with something that has no intrinsic value. So let's say, for instance, you got this pen, right? I buy this pen for, $2, okay, with the intention of investing it, right? So I buy this pen for $2 because my model and my crystal ball says that at some point in the future, it's going to be worth $3. And so I buy this thing that has no intrinsic value. You can write with it, but you can write with a lot of different things. There's a million different pens in the world, right? But I just think this one pen is going to be worth $3 somewhere in the future. And so I buy it and I hold on to it. And then I just wait for the day where somebody approaches me and says, "Hey, Rick, I really need that pen. Can I buy it for me for $3? And I'm like, "Hell yeah, you can." And boom, and that's speculating, right? When you take something that intrinsically in and of itself doesn't have any type of holding value other than, and the way that you make money on those types of investments, trades, let's call them, is if somebody's willing to pay you more for it later. And the only reason they're willing to pay more for it later is because they think they know better than you, right? Think about that. There's two sides to every trade, right? The person who buys it for the higher price thinks he knows better than the guy that's selling it for the lower price, for that price, right? Because if the guy selling it knew what the guy buying it knew, right, or so he thinks, then he wouldn't be selling it for $3, right? He'd be waiting because this guy, the buyer thinks it's going to be worth $4. So this guy is wrong, and he thinks it would be worth, right? So the entire concept behind speculating and investing, trading in that way, is basically just like your prediction of the future is smarter than the guy that you're buying or selling from. That's it. Perfect examples of this. I know you're going to kill me, especially if you made a bunch of money in Bitcoin, but Bitcoin is a commodity. There's no intrinsic value. And I understand it's gone bonkers, right? And that's wonderful. I hope you made a bunch of money in it. But from a long-term investment perspective, you're not going to bake that into your financial plan, what Bitcoin's going to do over the next 30 years, right? So Bitcoin is a perfect example and very now, obviously. Another one is gold, right? Maybe you knew this, maybe you didn't. There is literally no use for gold in the entire planet. Like, they use it for jewelry. That's it. You can't build anything with it. Gold is worthless. It's worthless. It's literally only worth anything because somebody's willing to buy it for a certain price. That's it. And so that's a perfect example, right? If you buy gold, this thing that is literally worthless, unless you want to put it around your finger, right? Then you're purely speculating, right? So now you can also apply that to stocks in the sense that a lot of people play the stock market. Now, when we talk about buying individual stocks, people like Warren Buffett do it the right way, right? So Warren Buffett believes, he said in interviews that if you don't know, have his level of expertise and his type of team behind him making the investments, right? Like he's got the smartest people in the world at helping him make investment decisions. He's like, if you don't have that, go buy an S&P 500 index fund, right? Go buy an index fund, play it safe. Chances are you could get it wrong. But the way that he invests in stocks is he buys stocks that he thinks are adding value to the world, and then he holds them forever. That's the right way to invest in individual stocks. So we can circle back to that here in a minute when I talk about investing. But otherwise, the entire Wall Street system, the entire machine is built to get you to do the wrong thing, right? The entire machine is to get you to buy ABC stock, right? Hoping that it runs up in value and then you have some sort of exit price. And then it runs up in value and then you sell ABC stock, right? Pure speculation, right? You're not buying ABC stock because you think it's doing wonderful things for the world and the products and services that it's producing are going to make the world a better place, and therefore more people are going to buy their products and services, and therefore their intrinsic value is worth more and more as they produce more and more stuff and help more and more people, right? You're just buying it because you think it's going to be worth more in 6 months than it is today. That's it. And if that's your reason for buying any investment, that's fine, but make sure that's in your play account, right? Don't do that in your long-term serious money. Don't do that with your kids' college savings. Do that in your fun money, your little E-Trade account, right? Okay, so that's speculating. Now, investing, what's the difference between that and investing? Investing is what I just said it was, right? Investing is when you purchase, let's just use a company as an example, right? When you purchase a stock of a company that you believe is doing wonderful things for the world, right? Their goods and services are bettering mankind, and people can't get enough of them. And because of that, they continue to pour more capital back into their goods and services and make them even better, right? You just have this constant ongoing cycle of just improvement, right? And making things better. And because of that, they're paying out more in dividends. And because of that, the company is growing and their intrinsic value is worth more and more and more, right? Because they're building things, right? They're producing for the world. They're making the world a better place. That's the way to invest, right? That's a long-term investment where you say, okay, we don't care. I don't care what this thing does in the next 6 months, right? That's how Warren Buffett thinks. He doesn't care what it does in the next 6 months. He cares what it does in the next 30 years, right? And if that company is a company like that, then okay, that's a good investment. Now, investing in individual stocks, I'm just using that as an example. I am not a fan of investing in individual stocks unless you're Warren Buffett and you have more money than God. If you run if you have billions of dollars invested, yeah, you can buy individual stocks, right? A whole team of analysts behind you. Yeah, well, go buy individual stocks. If you're one of us, right? Index funds is the way to go. So when you buy an index fund, right, you just buy basically every company in that index, right? So you buy the S&P 500 index fund, right? That's the one you always hear about. You're basically buying the stocks of 500 different companies, right? The biggest companies in America, right? And so when you do that, you're intrinsically buying into the evolution of mankind and what these companies are doing and how they're making the world a better place. And maybe there's some rotten apples in there, sure, but when you own 500 of them, that's okay, right? The good and the goods and services of the good ones far outweigh the couple bad apples that might be in there, and you make money as a result, right? That's sort of the evolution of the economy and our world, right? We're constantly getting better, right? Right? We're always getting just a little bit better than last year, right? And when you buy index funds and when you invest in index funds, that's essentially what you're doing. It's just buying into mankind getting better year over year. And so that is how we invest. That's the difference between speculating, which is you think you buy this thing now, and in 6 months from now, somebody will buy it for more because they don't know as much as you do, right? Or vice versa, right? Investing is investing in something that has intrinsic value that's continuing to grow and produce and better mankind and better the planet and do wonderful things, right? Because we know those companies are going to be around for a very long time. And when you buy all of those companies through an index fund, you can pretty much predict what your long-term returns are going to be, more or less, right? When you buy Bitcoin, you don't know what Bitcoin's going to be doing in 30 years. When you buy the S&P 500, you more or less know what the index fund is going to be in 30 years. And so that's why we invest, and that's why speculating is for your play account. Now, one last note. I know it's tempting, right? The Wall Street machine is strong and powerful, and they are ingrained in the psychology of everyone worldwide. And so if you want to speculate, right, if you want to buy that stock because you think it's going to be hot for the next 6 months or whatever, or buy some Bitcoin, or please don't buy gold, but buy gold, whatever. That's not a recommendation. I'm just, whatever you're into, right? Make sure it's in a play account, right? So carve off 15% of your money at most, right? Stick that in E-Trade, and that's what you play with. And good luck to you. I wish you well. But you know that if you completely blow yourself up, right, and you lose 15% of everything you've got, okay, it's not going to feel great, but it's also not going to blow up your entire future, right? If 85% of your money is invested correctly in nice long-term investments that we're going to hold on to, for 30 years, then that's fine. You can blow up 15% and you should still be okay, more or less, right? So that's how you can still speculate if you really want to. So anyways, I credit Charles Ellis for sort of planting these seeds in my brain, reading that the first time about how a commodity, for example, has no intrinsic value and has no purpose or place in anybody's portfolio because it's pure speculation. It's based off of somebody else buying it for more than you paid for it, and that's it. And that kind of blew my mind and changed my world, and that's very much throughout the investment course, the investment guide that I'm putting together for everybody. So anyways, thanks for watching. I hope you learned something. That's a big one. I've had that conversation many times over the years, and I think that's really important for the average investor to understand. So hope you learned something. Happy Saturday. Hope you're having a great weekend, and we'll see you tomorrow. Oh, subscribe, like, comment. I'm such a terrible YouTuber. Subscribe, like, comment. Okay. Thanks for watching. See you tomorrow.